Testing. Are we live? I think we're live. Testing 1, 2. I think we are live. Hang on. Hey, look at that. It's John. Good morning, John. No, sorry. Good afternoon. Good afternoon, John. All right, let's make some good trades here in the afternoon. Good morning, John, Jake, Dell, Sean, Trader, John King, Chicken, FO40. Good afternoon, Black Coffee. Good afternoon. It's morning somewhere. When is FOMC? The FOMC was the press conference is usually the biggest. FOMC is usually the biggest move at like the press conference. Hey, let's go, John. Good luck. Good luck. I am very curious how this is going to play out. I don't know what to expect. I kind of think we're going to go lower. I think so, but who knows? Who knows? First time I'm in your live streams, but I follow your other videos. Well, welcome. Welcome to the live stream, Brian. Good to have you here, Sam, but good morning. Good afternoon. Powell says, good afternoon, market crashes. Let's see. When is he supposed to start talking? I think it's like 2. Isn't he supposed to start talking at 2:30? Here, let me. 2:30, yes. All right, I'm gonna watch it. Should be fun. All right, getting a little bit of a move higher here. I'm just waiting. And we are back. How we doing, Matthew? You still watching your live stream? Do I trade the New York opening range at all? I trade the New York Open, yes. I don't really trade the opening 15 minutes or anything like that, but I do trade it, yes. All right. Hey, Powell is here. He said good afternoon. If I'm going to stream Powell, I guess I could. Do you guys want to hear him or not? Do you guys want to see Mr. Powell?
As appropriate to promote progress toward our maximum employment and 2%.
I'm going to turn him down.
The implications of developments in the Middle East for the U.S. economy are uncertain. We will remain attentive to risks to both sides of our dual mandate. And I'll have more to say about monetary policy after briefly reviewing economic developments.
Would you still love me if I was a worm? As much as a human being can love a worm, yes. I still want to go short. I did take like 2 trades, and I got stopped out on both of them on some short efforts that didn't work out.
Median participant projects that real GDP will rise 2.4% this year and 2.3% next year, somewhat stronger than projected in December. In the labor market, the unemployment rate was 4.4% in February and has changed little since late last summer. Job gains have remained low. A good part of the slowing in the pace of job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation.
I have no idea what he's talking about.
Has clearly softened as well.
I don't know, John. Not that I'm aware of. I've been kind of watching that situation, but not that I know of.
In our SEP,
Do I full port evals or do I take my time? Depends what prop firm. Apex, I usually go pretty aggressive. Take profit trader, I go pretty big size at the beginning, but then I slow down.
2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.8% over the 12 months ending in February, and that excluding the volatile...
All right, we are pulling back.
Core PCE prices...
This is where it gets a little dangerous trading this, but man, I do want to go short.
Sector, which has been boosted by the effects of tariffs. Near-term measures of inflation expectations have risen in recent weeks, likely reflecting the substantial rise in oil prices.
Man, I'm going to take the short here.
In the Middle East. Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation this year.
This is where it's very dangerous to trade this, but
2.2% next year. A bit
let's
higher
get new lows.
Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5 to 3.75%. From last September through December, we lowered our policy rate 0.75 percentage point.
Come on, dump it down through the 800s. Let's give it a big 100-point ripper.
Normalization of our policy stance should continue to help stabilize the labor market while allowing inflation to resume its downward trend toward
1 mini gets you green. I know, right? I've thought about it. Trust me.
Are uncertain. In the near term, higher energy prices will push up overall inflation, but it is too soon to know the scope and duration of the potential effects on the economy. We will continue to monitor the risks to both sides of our mandate. We are
Dump it! Come on! Oh, come on! Keep going!
Based on the incoming data,
Dump it!
the evolving outlook, and the balance of risks. In our SEP,
all right, I'm going to take that.
wrote down their individual assessments of an
I'm not going to be greedy here.
under what each participant judges to be the most likely scenario for the economy. The median participant projects...
All right, new lows, chat.
...will be 3.4% at the end of this year and 3.1% at the end of next year, unchanged from December. As is always the case, these individual forecasts are subject to uncertainty, and they are not a committee plan or decision. Monetary policy is
Would you
not
still-
a preset course, and we'll make our decisions on a meeting-by-meeting basis. To conclude,
Yeah, John, I know, yeah, it is what it is, but those, I think, being that those are legacy accounts and there were multiple violations,
2% goal,
I don't know.
keeping longer-term inflation expectations well anchored.
All right, trying to get, it's bouncing back off this overnight, or the previous low at the 800s.
Jobs with objectivity, integrity, and a deep commitment to serve the American people. Thank you, and I look forward to your questions.
And here come the questions. Hold on, chat.
Thank you, Colby.
I want to look for a short.
There's been some debate about whether the Fed should look through the inflation that will come from higher oil prices stemming from the Middle East conflict. Is that the right approach at this juncture? And to what extent does the fact that inflation has been above target for roughly 5 years now influence the committee's thinking around this?
So, first, let me say we're well aware of the performance of inflation over the last few years and how a series of shocks have interrupted progress that we've made over time. And that happened most recently
Man,
with tariffs. And
getting a pump here.
There will be some effects on inflation coming forward.
I'm just going to try one.
Important that we see this year is progress on inflation through a reduction in goods inflation as the one.
I'm still overall looking for a move lower.
Go through the economy.
I want to see a move down below the 24. Test the 700s even maybe.
To sort of understand that we actually are making progress, because on net we didn't make progress. And if you look at total inflation, total core inflation, it's about 3%, and some big chunk of that, between 1/2 and 3/4, is.
I don't know. This thing looking pumpy. Oh snap!
Whether we look through the energy inflation doesn't really arise until we have kind of checked that.
Ooh, got to be careful here.
It's kind of standard learning that you look through energy shocks, but that's always been dependent on.
Sometimes I don't really want to listen to him.
And I think now it's also dependent on what you mentioned, which is that broader context of 5 years now of inflation above target. We have to keep all of those things in mind, and the question of looking through when it does arise will be one to approach not lightly, but in the context that you mentioned.
And just on the S&P, can you help us make sense of why there is still a bias to cut for most officials this year, despite the upward revision to headline and core inflation and the essentially unchanged forecast for growth and unemployment? I'm just curious, kind of what's the genesis behind the need? What's the need for the cut?
Yeah, so there are 19 people.
Come on, market, dump it.
19 individual submissions.
Dump.
And if
you want to do it.
The median didn't change, but there was actually some movement toward.
I might kill this if we don't get a move here.
People, so 4 or 5 people
right now.
From 2 to 1, let's say. 2 cuts to 1 cut. And each person has individual, stories behind what they want to do. But essentially, it is that the forecast is that we will be making progress on inflation.
Come on, Powell, say something weird.
Progress on inflation. It should come as we start to see in the middle of the year progress on tariffs. Going through once and then tariff inflation coming down. We should be seeing that. And the forecast
it's not happening.
On the performance of the economy. So if we don't see that
All right,
then you won't.
I'm gonna wait.
Thank you, Howard Schneider with Reuters. Just to follow up a little bit and to be clear,
Talk about your date with Nancy Pelosi.
2026 solely.
No, I do not use Kalshi. No, I don't.
So that's going to be part of it. But, that wouldn't be most of core, right? So the oil shock for sure shows up here.
Kevin Crawford, nice.
Well, but yes, but no, there's also just the feeling that we haven't seen, the progress that we.
I'm gonna wait. I don't like the wick. Right now, we've got a wick here and a wick to the. We swept the lows. That
for whatever reason, people
makes me a little bit nervous, but
inflation forecast.
Still feel like this thing is kind of set to make a move lower.
But it's also, I think, a reflection of the slow progress we've seen on tariffs, which we believe we will see. It's just a question of how long.
And here's the dump. Should have held.
All the way through the economy, and it just takes some time.
Right. And is the lack of change in the SEPs, again, just to explicate this a little bit, more due to the expectation that the oil portion of this will pass through, or more out of concern that there is a potential blow to consumption and growth coming in the form of wealth effects with the stock market down, in the form of.
Wow, there we go. Down. We're about to make new lows, chat. Should have held.
So I didn't get the second part of your question.
The consumers are going to be potentially diverting money to gasoline from other parts of the economy. There could be a growth shock or a redistribution of spending there. They can hit consumption, wealth effects as well. I guess I'm wondering, is the rate forecast not changing because you think the oil shock is going to be temporary, or because you want to be sure you're positioned in case growth starts to slow?
So the thing I really want to emphasize is that nobody knows. The economics effect could be bigger, they could be smaller, they could be much smaller or much bigger. We just don't know. So people are writing down something that seems to be
Matty Matt.
conviction if we have high
Talking about oil and war. Yeah, I don't know. I'm actually surprised we've not moved lower. I thought we'd see a bigger move lower, but the market might be kind of pricing this in. I think the market's kind of expecting this. Which means if he says anything positive, this thing could rip higher.
just don't know. So I
feel
would
like
say there's a conviction.
feel like the major questions have been answered.
You've got to write something down.
I'm starting to get a little bit bullish. I'm starting to get bullish, chat.
So, and you know, we don't debate how long. How do you do that? We wouldn't be able to debate what the.
We know he's going to want to. It's everything is always, you know, rainbows and butterflies here.
What you've written down before will be, you'll be reluctant to move too far away from that, just because you don't know. It's so unclear what the direction from this particular end will be. Meanwhile,
Man.
the growth has been solid, and inflation, the overshoot is mainly from the goods and tariffs. And, you know, the labor market is, the unemployment rate, of course, is little changed since September.
I don't know. This
Very, very low break-even rate, apparently, for new jobs, with little growth in either demand or supply. But the U.S. economy is doing, you know, pretty well. It's just we don't know what the effects of this will be, and really no one does.
Mr. Chair, in the past, the staff has suggested that higher oil prices, they have which Howard was talking about, but that's...
Man, it's getting close to my nap time, chat. If the market doesn't start moving here, I might have to take a nap.
How much U.S. production is happening right now?
So the first thing is, there is, you know, the original thinking, the long-standing thinking, put it that way, is that you do look through energy shocks. But as I mentioned, that's conditioned on inflation expectations and that kind of thing. So, sorry, your question was?
What the staff is saying about, and has said in the past,
yeah.
about...
So there'll be an offset.
Offsets, yeah.
So that's true. You know, we're a net exporter of energy, right? So any effects on employment and economic activity and spending would be offset to some extent by the fact that our oil companies will be more profitable, and they may even do more drilling. If you ask oil companies about doing more drilling, though, they're going to want to see, you know, a consistent rise in oil prices from where they were before the buildup for the war, and they're going to want to believe that that's going to be persistent for a fairly long time. So they're not sitting there waiting for oil to go over $70 a barrel, and then they're going to start drilling or whatever. They're going to make a reasoned, careful judgment that we're going to have higher oil prices for an extended period, meaningfully higher. So I wouldn't say there's much of that happening. Not much will be happening now, but some of that could happen over time if you see that. But so the net of the oil shock will still be,
Man, I might.
downward pressure on spending and employment.
I don't know, man. I'm starting to think about going long.
Colby's question,
Feel like we've had our chance here to go to. I'm going to take a shot. If I'm wrong, I'm wrong.
price shock would undermine...
But I feel like we've had our chance to
You know, we have to do our
go
analysis
lower, and we don't want to do it.
and, you know, think these things through carefully. But of course, that's on everyone's mind. You know, we're well aware of...
If we're wrong, we're wrong.
And, but you don't want to overreact to that. You know, you want to make the best judgment.
I might add again here around the 800s if we need to.
Decision making more than is appropriate. It's more the thought that it's been 5 years, and we've actually had, you know, we had the tariff shock, we had the pandemic, and now we have an energy shock of some size and duration. We don't know what that's going to be, actually. And, you know, it's one of those things where it's a repeated set of things, and you worry that that's the kind of thing that can, you know, can cause trouble for inflation expectations. And so we worry a lot about that, and we are very strongly committed to doing what it takes to keep inflation expectations anchored at 2%. And, you know, I think it's important that we do that. Very important.
Nick Timoros, Wall Street Journal. Chair Powell, you've described monetary policy as modestly restrictive. If the unemployment rate is roughly stable, inflation moving sideways in the high twos, with an ongoing overshoot in services and non-housing services, not just goods, and the economy doing fairly well as you just outlined, what gives you confidence that inflation returns to target over the next couple of years?
Okay. So I would say the rate is, you can characterize it as in the high end of neutral, or you can characterize it as perhaps mildly restrictive, even modestly restrictive. No one knows for sure, but it's in that range where it's somewhere around the borderline between restrictive and not. Remember that a big part of the disinflation we're looking for is just the runoff of when tariffs are put
All right, we might have to bail here.
they raise prices to some extent, to the extent those prices are the tariffs are paid by consumers.
That's where it gets a little dicey. It's going to get a little dicey here.
Process. It takes 8, 9, 10, 11 months, a year to go through the system, and we're waiting for the tariffs, which were put in place over the course of the middle part and later last year. We're waiting for that to go through the system so that goods inflation will return closer to what it's always been. I mean, it used to be, for many, many years, it was negative. And then, the year before tariffs came in, it was 0. And it's running at like 2% now. So, and so that's kind of, goods inflation is running at 2%. So that's not coming from standard Phillips curve restrictive restrictive policy.
Come on, market, do something.
Runoff of a one-time thing. We also think it's important, though, to keep policy either mildly restrictive or close to that, but not too restrictive because of the weakness in the downside risk in the labor market. We are balancing these two goals in a situation where the risks to the labor market are to the downside, which would call for lower rates, and the risks to inflation are
doesn't want to do it.
Call for higher rates or not cutting anyway. So we're in a difficult situation, and we feel like our framework calls on us to balance. And we feel like where we are now, which is kind of on that borderline, the higher borderline of restrictive versus
Rip it.
not restrictive. We feel like that's the right place to be.
Oh, come on.
Non-housing services, though, because there are some people who think that it hasn't come down very much, if at all, over the past year. If wage growth has come down, if the labor market has loosened, why has non-housing services inflation maybe been?
I thought we would see more action.
Good question. It's frustrating. Non-housing services they basically moved sideways for a year. They're at the same level, and we do expect that they will come down. But it's a bunch of idiosyncratic things. But at the same time, that is one of the things we should be seeing, because
rip it.
Clearly not.
Come on.
Of inflationary pressures, and that should really matter for non-housing services.
Go.
We're not seeing progress there, so we do.
Oh man, it's just not wanting to do it.
What we want to see for this year, rather.
I'm losing my patience.
Finally seeing that the goods inflation come back down because the one-time effects of tariffs are through, and then also get some help from non-housing services. That's what we'd like to see. But
We might sweep these lows before we make a move back higher. I feel like. Just not sure I want to hold through it.
So in December, we saw employment numbers revised down to negative 17,000. January revised down. February posted a loss of 92,000. Is the employment side a far greater risk than the inflation side? Because we are seeing inflation, CPI is close to 2%. PCE has ticked down overall.
It's really, I wouldn't say that. I wouldn't say that that's clear at all, that one is more at risk. So you can point to the employment being stable, and in a world where both supply and demand for workers have come down very, very sharply over the course of the past year due to immigration.
Yeah, I don't know about this. Let's see if we sweep the overnight and then maybe we make a move higher.
For example, and the ratio is the unemployment rate, and it's been stable since September, so that tells you that. Inflation, you can. We're at 3.0% core inflation, 2.8% headline. So we've been well above the 2%, that amount, whatever it is, 0.7, 0.8, we're a full percentage point above 2% for some time.
Oh boy. All right, time to pay attention.
Down to 2%. And we need to keep focused on that, even though we do now face some new inflation from energy. So I'd be hard-pressed to say that one of them is obviously more at risk than the other.
And if I may, what happens if there's no Federal Reserve chairman confirmed on May 15th? Would you stay on?
So if my successor is not confirmed by the end of my term as chair, I would serve as chair pro tem until he is confirmed. That is what the law calls for. That's what we've done on several occasions, including involving me, and it's what we're going to do in this situation. And while I'm at it, on the question whether I will leave while the investigation is ongoing, I have no intention of leaving the board until the investigation is well and truly over. with transparency and finality, and I would refer you to the state.
I don't know. This thing's just not really moving that much, but it.
On that. On the question of whether I will then continue to serve as a governor after my term ends and after the investigation is over, I have not made that decision yet, and I will make that decision based on what I think is best for the institution and for the people we serve. Figuring you probably were going to set the dominoes off there, Edward. And I'm not going to have any more to say on those issues, by the way.
All right, we swept the lows. Can we get this rip now?
Times. People have drawn quite a few historical parallels with the current situation. We've seen oil price shocks in the past. Some people have said the first Gulf War and the Fed's response to that, where there was a focus on the growth risks, is the right parallel. To what extent would you agree with that, and to what extent would you think we're in a different place today? Thank you.
You know,
I don't like this. We're just slowly bleeding lower.
in some circumstances that
Not much happening.
case. In fact, for example, if we do see the kinds of disinflationary progress that we expect to see due to tariffs that I mentioned, I think it's hard to say, and it will depend to some extent on the size and duration of the effects we're seeing on prices, and it will depend a lot on
This 80 level is kind of what I need to hold. And we might, this is going to be the last resort here.
Order filled. It doesn't seem from the projections or from the
Last line of defense. This is it. If we don't get something here, we just got to cut our losses.
Side story has changed, despite the quite negative number in February. Would that be the right take? And was there anyone else in the room who thought differently, and that the February jobs report was cause for concern?
So I think you have to take the two together. You know, in a way, the January report was,
Man, what the heck?
and
Nothing.
the February
Absolutely
report
nothing.
was, if you put them together, you get something in the middle, and I think you have to really, as you do, I'm sure, realize there was a strike and there was weather, and that's about 80,000 of the negative effect total on the February report. Notwithstanding,
Come on, really?
back overall, there are a number of indicators that suggest
Really?
stability. But the thing that I think good number of people on the committee are concerned about is just the very, very low level of job creation. If you adjust what has been the
Hello?
job creation over the past, let's say, 6 months, if you
I thought I
adjust
clicked the
that
button. Did I not click?
Our staff thinks is the
Uh-oh.
overstatement
Uh-oh.
counting. Effectively, there's zero net job creation.
Gosh, I thought I clicked.
But actually,
Did I misclick?
that's about what the economy needs in terms of dealing with very, very low.
I don't know if I clicked or not. Are we lagging?
In our history. So
Oh no.
sort of a zero employment
I
growth
don't-
equilibrium. Now that's balance, okay, but you know, I would say it does have a feel of downside risk, and it's not kind of a really
I
comfortable.
might have misclicked.
You know, we look at that, we see it, we get it, and I mean, everybody understands the arithmetic, and that's you can say the break even is zero. It's something we're watching carefully, and you know, are concerned about, but ultimately, though,
Yeah, I'm out.
it's a consequence of deliberate policy, which is really the changes to immigration.
Just nothing. Absolutely zero.
But nonetheless, something we watch carefully.
Thanks, Chair Powell.
Oh my God.
The economy's experienced a series of supply shocks in the last few years, COVID, tariffs, 2 oil price shocks. Do you think that is bad luck, or has something changed in the world that makes supply shocks more common? And does the central bank need to start taking account of the risk of supply shocks as a more common problem?
You know, we did go through a long period where the shocks were all demand shocks. And, you know, so we've had a lot of practice thinking about supply shocks in the last 4 or 5 years for sure. And it's just a very different thing, and a much more difficult thing, because it does immediately raise the question of tension between the two parts of our mandate. But, you know, has the world changed? I mean, COVID is a one-time thing, right? Just energy.
Watch this thing rip higher now.
It's not because of some.
I mean, this thing is slowly bleeding lower.
And you know, the oil shock with Ukraine was also a consequence of
It's annoying.
military action. So I don't know that the world.
Yeah, I don't know. This just feels like it wants to slowly
There's
bleed lower.
paper in that speech a number of times. A number of people have tried to make the case that that is the case. And in fact, we have seen more supply shocks in the last 5 years than we've seen years before that. It's a fact.
Okay. You said last year that the Fed was reviewing its communication strategies, including the SEP, as part of its framework review. Whatever happened to that? And I have like 5 follow-ups to that, but I guess, what would you?
All right, I'm going to stop listening. And is this thing really just going to keep? God bless it. Man, we're just getting zero move, zero bounce. Thought we'd see more whippy action. It's annoying. We're just getting nothing. Might be cooked, chat. We might be cooked. Man, oh man, oh man. Come on, go. Gee, oh my goodness. Oh my goodness. I don't know. As soon as I close this, you know we're gonna rip 100 points. Rip it! Come on, go! It just can't do it. Ah, this is not good. This is not good. This is not. We got to get back above the 780s for us to have any chance. I should just reverse it. I should hit the reverse button. I should, but I won't. I won't do it. Ribbit! Go! Go! Oh, please don't do the hope and nope. Please don't do it. Don't do the hope and nope. Come on, go! I want the 24,800s. Come on. Go! Keep going! Come on. One more push. One more push. Oh, come on. I should get out. I should get out. I should get out here. I know I should. Just fill me. Fill me. Thank you. All right. Disaster has been averted. I need water. I need something to drink. I'm all hot. I'm hot and bothered. I knew we were going to get a bounce. There's just no shot. We just slowly bleed lower. I mean, I didn't know, but I knew. I wasn't about to close out and then get a rip higher, even though that's not a good strategy, trust me. But sometimes you got to believe. Now what do we do? I want to see us try for new lows and fail. If we fail at new lows, then wow, look at that. There we go, ripping it. Should have held chat. I told you. I do need a beer. Oh, hey. Come on, man. All right. I want to see us try and making a move lower, at least an attempt. So we had what? We went from $8.10s to the 740s. I mean, really, this is not that big of a move for FOMC. It really isn't. All right, we're getting close here, chat. Right here, the 768, 770 level. That's where I'll buy. That's where they would trap the shorts. If we trap the shorts, that's where it'll happen. Oh no. Oh no. Uh-oh. Hang on, we have a problem. I only got filled on 2 of my accounts. Okay, never mind, we're filled. All accounts have been filled. Let's go. Now keep going. I do not want to see this down below this. I do not want to see that. I don't know. I don't know. Okay, right here. Right here. We got to go. Get back above the 800s. Come on. Do it. Do it now. Uh-oh. You can't do it. All right, I'm getting out. We can't, if we can't do it there, we can't do it. There's a chance this makes new lows, so I'm not going to play around. I was hoping we would just rip straight back up and break above the 800s, but it looks like we wants to consolidate here. Hang on, I got to check something on my trade copier. Why? Anyway, we're good. Man, this really bothers me. Look at the difference in P&Ls on this. That is crazy. And I've traded quite a bit today, but the fact that we are copy trading and our P&Ls are off by $140 just because of the difference in commissions is actually wild. Kind of annoys me. All right, I guess we could be going lower. All right, I mean, I guess maybe I should have just stayed. I guess my bias should have remained short. I probably should have. I don't know. Felt like we were trying to go lower and we couldn't, so I switched my bias, but I'm only allowed to switch my bias one time per day. I should talk to Tradeify about it. I don't know. I don't think they'll care what I have to say. But it is kind of annoying. I might have to trade those separately just to try to make a little more money on those. All right, let's see if we make new lows. Are we going to make new lows, chat? Is Powell done talking? Man, I'm tempted. Man, I'm tempted to go long here. I'm gonna. Man, do I want to take a chance here at a long? Market just, this is really not much happening. Wait, what is oil doing? I didn't even look at oil. Oh, wow. Not really that much. Honestly, this FOMC has been a pretty meh FOMC, to be honest. Now, in the past, we usually get the bigger move happens after he is done talking. Like around 3:30 is when usually the bigger moves happen. All right, if we make a move back up higher here, I'm going to take this. We just rip lower, make new lows. I might have to reevaluate my long bias here.
Hi, Dad.
Well, hi, Cody.
Games. Dad.
Say hi, chat.
Hi, chat.
Tell now, say market, go up.
Market, go
Say rip it.
Rip it.
Rip it.
Rip it.
Okay, run. Market is not listening. Oh man. Okay, we gotta get out of here. I can't hold that if we make new lows. That's annoying. Man, are we really? We're just going lower, I guess. Should have kept my original bias. I hate when I do that. I don't even know that I want to keep trading this, to be honest. I don't know. There's not much happening. You guys want me to trade minis, don't you? Yay. I wish we could trade gold again. Okay, now watch this rip higher, stupid market. Yeah, that's probably true, Niles. I should probably lock my accounts. Yeah, I agree. That's probably the wise thing to do. But where's the fun in that? All right, we did make new low by a tick or two. We really are just going to grind lower. I kind of give up. 16,000 by August 15th. Wow, that's crazy, Matty Matt. If that happens, I'm going to put my life savings into the S&P. And here are the 720s. Yeah. All right, I'm going to try one more time. This is my last dip buy of the day. Baby, one more time. My last dip buy of the day. After this, we go home. Rip it! Come on, go higher, please. I just need $400 more. I need a 200-point ripper right here. Rip it! Come on, market. You can do it. You can do it. Actually, I don't agree. I don't think it can do it. I'm not sure this market has what it takes to go higher. I don't think it has what it takes, chat. Hey! Piece of... Okay, that kind of offended me. Man, I just refuse to believe how this thing is going. This is not a smart move. Is that douchebag done talking, by the way? Is he still yapping? Come on. All right, I might give up. I might give up, chat. You win today, market. You win. Oh, I'm going to lose it. Are you serious? I want to go take a nap. I need to take a nap. My brain, my body, my eyes, every part of my being needs a nap right now. All right. Are you going to go higher? Are you going to do it? I don't think it's going to do it. Oh, I give up. Wow. So annoyed. So annoyed. Like, what is this? Is this the overnight session at 1 o'clock in the morning? What is this even? Like, seriously. So dumb. Oh, I know, Matty Matt. It's the most annoying thing in trading is when the market just refuses to go in your direction. It's like, but it's not like it'll go against you that much. but it'll tickle your entry just enough to give you a little bit of hope, and then straight back down. And it'll just keep doing that. It's I call it the hope and nope strategy. It'll tickle your entry, just a teeny tiny little tickle, and then it'll dump. And then it'll, just as you're about to give up on the trade, it'll jump back up. It'll tickle your entry just a tiny little bit again, and then it'll go down again. Oh, it's the most maddening way to trade in human. It's just maddening. What time is it? 3:27. But you know, if I close this trade, you know we're going to rip 100 points higher. It's going to happen. I can feel it. But I've about had it. I'm about ready to shut everything down. One more attempt. If you tickle my entry one more time, I'm out of here. I'm out of here. One more time. I dare you. I dare you to tickle my entry. Go ahead. Oh, I'm getting tickled. I'm getting tickled. You guys feel that? I'm getting tickled. Tickle me more. Yes, tickle me. Oh, yes. Tickle me more. It feels so good. And now we're going to rip it lower. Watch. Watch. It's going to be like clockwork. Just watch. We're going to tickle a little bit, and then we're going to dump straight down. Just watch. It's going to be a thing of beauty. Just don't worry. Don't worry, chat. It's coming. This thing's about to dump 30 points in 2 seconds. Go ahead, Market. Keep tickling me. I like it. Oh, yeah. Here it goes. Oh, yeah. See, chat? See, chat? This is what I'm talking about. Yep. There we go. I hope you're happy, Market. You sick individual. I'm going to file a restraining order. Feel violated. That sounds so bad. It is bad. That's the problem. It is bad. Okay, Market. I am actually not joking. I'm going to give up. I'm out. I give up. I give up. Today, summary. We went 12 rounds with the market and the market won. We give up. Congratulations. You have defeated me. Congratulations. I give up. If this rips 100 points from here, chat, just know there are going to be problems. Okay? If we rip 100 points from here, we're going to have problems. All right, I'm serious. I'm going to take it. I'm going to go take a nap. It's going to go back to the 800s. Don't say that, Matty Matt. Don't say that. Don't say that. Don't talk it into existence. But this is crazy. This is FOMC. It's 3:30. It's FOMC. And we can barely move. Like something is wrong. Somebody needs to unplug this market and plug it back in. Because it's broken. Something is wrong. I'm telling you, Scruffy, something is wrong. I don't even know what oil is trying to do. What's gold trying to do? Yeah, gold is a joke. Everything's a joke. I give up. All right, chat. I promise tomorrow we will do a giveaway. I promise. Okay? I promise tomorrow we will do a giveaway. But for now, I'm out of here. This market can just go stub its toe. I really was hoping we could get these accounts back green, but I mean, we probably could have if we had, honestly, if we would have just kept our short bias, we probably would have been fine, but well, that's not what happened. All right, chat. All right, I'm out of here. Thank you, everybody. I appreciate it. We'll be back tomorrow morning. Take care and God bless.